Good morning, everyone. It is Monday, September 26th, and this is the weekly clean slate volume profile market analysis that we conduct every Monday morning. And the whole purpose of this is to discover the market structure and so that we can use it for our zero DTE trades and to show people, show you all how we actually use volume profile in our trading. All right, so why don't we get to it? Let's first of all recognize that we've had quite a week, quite a month. September historically is the most down month for traders, fund managers, algo people. It is by far the single month that has the worst performance of any other month. And so this September did not disappoint by any means. No sirree. We are down, I think it's around 7%, and I think that there's actually a chance that we may top 10%, a 10% down move, possibly as much as 12% this month. That will make this September the worst, one of the worst, I think it may be the worst September on record. All right, so let's get started first of all and take a look at the dire situation that we are in by going to the monthly chart. I don't usually go this far out, but I think that this is pretty telling. And what I want to show you here, let's see, let's get all of this into perspective. Yes, very, very scary below. I want to show you right here. We are currently at a level that is going to test the June lows, and that's this big red candle that you see right here. And when I say the June lows, that was the low of this current bear market that we're in. And we had a little bit of a pullback. A lot of people thought that we were coming out of this bear market and going to new highs, but no. And each one of these candles is 1 month, by the way. And so this was June. Here's July, where we rallied, the bear market rally. And then August, where it capped that rally. And then in September, where we just totally dumped, and we're sitting here very, very close to the June lows, threatening to break through it. And if we do, as you can see, as I noted here, very scary below. And this whole area here in the volume profile that you see that has a total lack of volume, we call that a volume well. And there are two major volume wells here. There's this volume well number 1 and volume well number 2. There's a lack of liquidity in there, so that means that price has a tendency to move very quickly through those volume wells because of that lack of liquidity. Wherever you see a large node, you'll see more liquidity in the market. And so the next level that we see that type of liquidity is here at T2, which is at the top, just at the very, very top before the pandemic crash. I guess that's what you would call. I'm going to call that the pandemic crash, where we came down very, very quickly and then rebounded after the Fed came to the rescue, or I should say the plunge protection team came in and just started bidding up this market with the Fed put. And that continued. And of course, they're the source of all our problems. And that's been going on now since the great crash of 2008, 2009. And I believe that we're heading in that direction, possibly worse. Now, right now, though, the current threat is this level here that we're at. And there's a very tiny little node here that we call T1, and this node up here that we call T0 that we came down from, and then T2. T2 is our next level that we're most likely to land. And once we break below these June lows, it's very likely that we will continue to move down because of that lower liquidity. All these green lines are lines that I call LVLs, or low value levels. And they are points within the volume well that are much lower than any other point. And the reason why I point them out or mark them up is because there you will find, if you look at an order map, you will find that orders are all lined up around those, and those provide various levels of support and resistance. And so they are significant. And when you zoom in and you start examining price, you'll see that price will be, I guess, respecting those levels to a great degree. And we use those levels in our scenario analysis. Okay. So that's the big picture here, the monthly picture. Let's go to the weekly picture. And we'll get basically the same view. Right. So the first 3 weeks of September, let's see, 1, 2, 3, right there. This first week, second week, third week. The first week was another little bear market rally, followed by 2 down weeks, and now we're on the very final week of September. And that's the one that's threatening to move through this T1 node. Although you can't really see the node in this view, it does exist. I think we can bring in more data, and you can see the node there. It's what we would call a child node, because compared to other nodes, it's very small, but it is still significant, and it is a level of great support. However, I don't think that support's going to last very long, as you'll see as we zoom in a little bit closer. Let's go to the daily. All right, so here's the June low again, and then the T1 node. And we mark the nodes with a T and then a numerical suffix. And the reason why we do that, the number itself typically refers to, well, it's just really a label. That's all it is. So that inside of our group, when we're talking about a particular node, we can talk about it by its label. And so then there's really no misunderstanding when we're doing the analysis inside of our trade room. All right, so let's zoom in a little bit more. Now, typically what I'll do is now this is called the clean slate analysis for a reason, but I wanted to show you where we were and show you the markup and what all these lines mean, and so that when I recreate them, you'll understand what they are. And so we'll zoom in a little bit more. We'll go to a 1 hour view, and you can see here's the T1 node again. We came down to that, and we're consolidating inside of there. And remember the green lines that I call the LVLs. You can see how when I created these in a much larger time frame. So I don't see any features here in these more local volume profiles. They were all created in a much larger view, and you can see how price tends to respect them. And so that's why they're significant. All right, so let's get to it. Now, what you're seeing here, these arrows, are my predictions for today. And every day we use these LVLs and the volume nodes, the T levels, to plot out where the most likely place price will go for that day. And I always create both a bullish and a bearish scenario. So I have 2 scenarios here. One is this, here's the bullish scenario. Now I color them based on the one that I favor most is the lightest one, and then the one I favor least are the darker ones. So that's why they have different colors. So the yellow or the bearish scenario is the one that I favor most, where I think that we'll break down below the this volume node, but I don't think we're going to take off just yet. And I think there's also a very high likelihood that we're going to come up here, and we may even come all the way up to here today in an attempt to fill this gap. Now, you can't see the gap here, but if you go to the SPX, you can certainly see it. Let's see. Let's go to the daily view on the SPX. So there's this massive gap. Let me also get rid of all of these objects here. Remove all the drawings. So here's this gap that I'm talking about right here from Friday. And of course, a lot of people believe that, when there's a gap, it must be filled. All gaps must be filled. So, I'll give people that. I mean, that might be true. I don't think it is true. And it certainly doesn't mean that it has to be filled right now. I mean, if you look at back here in June, we had massive gaps. And of course, you could say, oh, yeah, well, they were filled. See, they were filled, a month and a half, 2 months later. So I don't really subscribe to that, but a lot of people do. So I'm just going to point out that there was a gap on Friday, from Thursday to Friday. Now, I don't believe that it will be filled, per se. And in fact, I think that we're going to continue down, but I'm going to give that to people. And that level right there is at 3730. So if we go back to the ES, 3730, now the ES is a little higher, so that level will actually be 3745, which would be right about here, right about there. So that's actually where I drew it in the first place. So there's a chance that we'll come up and fill that gap, but I don't know. And the reason why I think that we might come up there has nothing to do with the gap. It has more to do with the extreme move that we had down here. And most people, I think most analysts, are thinking that we're going to be moving down and moving down hard. It's almost, a lot of people thought that this would be one of those Bloody Monday type of deals. But when you have everybody universally thinking that something's going to go down or up and the sentiment is all going in one direction, often the smallest thing can set things off, and we can get a little spurt in a sort of a counter rally move. And so I believe that that's a very big possibility that we might do that. And that's really the reason for the bullish scenario here. But I think that will be short-lived, and it will come right back down into our T1 node. The more likely scenario today, I believe, is to move down through and at least initially break through the T1, and then this level here at 3638, I believe that is actually the same level as the June low. Is that true? Yes. So that is also the level of the June low, and I think that we're going to probably bounce off of that. That's what I think is the most likely thing to happen. All right. So that's why I have those scenarios picked the way I do. All right. So let's start by doing a removal of all objects. We'll go to the daily view. That's where I always start. We could even go to a weekly view. I just need to get enough data so that I can, find all the major volume nodes. Now, this is the pandemic low, the pandemic crash over here in March of 2020. And I believe that is really our destination, at least for the next leg down. I think we're going to go to the high just before that crash. And then I believe that we'll move through there with, I think, a lot of, this is going to be tough to get through all of this area here. But I think that the market is such that it will move down through this area here and eventually get down below these major nodes here. You can see that there's many of them, and there's also a lot of empty space in there too, so that's going to be significant. So this is going to be tough to get through, but I think that we will. This next move here down to the top of just before the pandemic crash happened, I think that is our next destination, and it's a good 200 points down from where we are at right now. And you can see there's a massive volume well here, which means low liquidity. All right, so let's plot all this out here. Now what I do is I'll draw out the where I believe the the major nodes are. And the way I draw them is that I want to pick off their steepest points. Now, in this particular case, I believe that's right about there. And we'll leave, we're not going to get to this probably until next week. And when we do, then I'll do another analysis. And I like to go all the way over and show where that's all coming from, right? And then we can do that for this node. And what I try to do is get the very steepest edge of that node in there. And the reason for that is that is actually where the transition is from value to non-value, right? So we'll just move that right there. And there's really no need, I think, to go up here, but, well, we'll do it for, just for the hell of it. We'll plot these out. I don't believe that we're going back up here. Highly unlikely. Let's see, about there. All right, so let's move to a daily view. I usually do this in the daily view, to tell you the truth, but I thought that this is telling. So this might be a little bit more realistic to put this like right about there. All right. That looks about right. Might even say that this guy here is a little narrower. So I'm just, just trying to get everything lined up here, right on the steepest edge. That's significant. That's where I want to be. And this node here doesn't really show up until you bring in all of this data here. All of that. I mean, it's not apparent that it's there. Once this is all gone, you don't see that anymore because we don't have any activity down here in the near term. It's all from a year ago, but you would think, well, how is that significant? Well, it is. All of this activity back here is super significant, more so than anybody would believe. And I know that most analysts using volume profile pay no attention to all of this old data. But I found definitively that it absolutely 100% comes into play in today's market. And the reason for that, I believe, is that there are still positions and still levels here that are respected by institutions and investment houses and so forth that they're either defending or have plans around or whatever. It doesn't matter. They are significant, so we mark them up. Now, we have all of these other sort of sub-levels here, and I think that they are also significant. And what I'm going to do is I'm going to mark them up as well, but I'm going to mark them up a little bit differently. Instead of marking up those individual nodes, I'm going to mark up the space in between them as what we call LVLs. Let's see, horizontal rays. And so I picked the very lowest point in those. Let's make that a little narrower so it's easier to see. Pick the very lowest point. These are all going to become super important as the week progresses. Now here we have a couple of different ones, so I'm going to pick the lowest one, which is right about there. And it may change a little bit, but I think that those are pretty good. And we also have a couple above here too. Right there. And there. All right. And I think we can make the case that there's one right above here too, but it's hard to see. right about there. All right. So now that we've got the markup, we'll zoom in. All right, so here's our markup, and we'll be using this for the coming week to determine where our scenarios, how the scenarios will be placed here, and how we will actually find areas where we'll have placement for our strategies, our spreads, and so that we have the proper coverage based on these levels representing support and resistance. And I mean, already, once you zoom in, you'll see that each one of these levels, like right now we're in an hourly view, but if you go down to a 15-minute view, you'll see how each one of these levels are respected. So, and there's no doubt in my mind that each one of these will become significant in the days to come. All right, so that's basically how I do it. There's a little bit more to it, obviously, and then during the week, every afternoon at 3 p.m. to 4 p.m., we do the final hour analysis and trade. And so this afternoon, we'll be examining the markets and any trades that we made during the day. And we'll also be talking about the speaking tour that the Fed governors are going to be on all this week to try to make, I guess they're going to temper or try to put some context on their rate hike and all of the narrative that has already been put out there by Jerome Powell. So we'll talk about that tonight. So see you at this afternoon at 3 p.m. Thank you very much. Take care. Have a good day.